So let us take this discussion forward with Vinayak Chatterjee. He's founder and managing trustee at the Infravision Foundation. Thank you so much for taking time out and joining in. We have discussed this at large in terms of what the potential outlook is for the budget, for infrastructure as well as energy. But just wondering from you whether the expectation is that we'll also see a pickup when it comes to the overall private Capex cycle.
Good morning, and thank you for having me on your program. I've had the privilege of participating in a specific pre-budget consultation with the Finance Ministry in the infrastructure sector. And as you would realize, and as you have already said in your channel, there are a vast number of budget expectations across many, many sectors. So in the limited time available, let me give you what I would consider are the top 5 cross-cutting highlights, things that will impact across sectors. The first is the quantum of the outlay. Now let us roll back to the last full year budget, which is 23-24. I'm not counting the interim budget. And there the outlay for infrastructure was 10 lakh crores. And that 10 lakh crores came on the back of 2 years of consistent, very heavy increases in outlays ranging from 25 to 30%. If for a minute I ignored the interim budget as merely an arithmetical exercise, then the expectation of this full year budget, 24-25, is that the finance minister will make an allocation of around 13 lakh crores, 30% over the last full year budget's 10 lakh crores in the forthcoming budget. So the expectation of total outlay for the infrastructure sector is, from the industry watchers, is 13 lakh crores or a 30% increase minimum. Now, this is important because as we all know, we are still waiting for private Capex and to, in a sense, galvanize itself. So public expenditure in infra is expected to continue to pump prime the economy. And if we are pushing for a 7.5 to 8% GDP growth, then the 30% increase, all the mathematics points to the direction that this 30% increase in public spending through the union budget is possibly the way to go. So that's point number 1. Point number 2, I think, is an important point affecting the infrastructure sector. It is strictly not a union budget issue, but it is a GST Council issue. But it has wide ramifications on the infrastructure sector and government's own budgets, which is the 28% GST on a commodity called cement. Now, it seems quite irrational that an Aam Aadmi product plus a crucial infrastructure intermediate will be taxed at the same rate of 28%. And we have very strongly from the infrastructure sector recommended to the Honorable Finance Minister that the budget speech use the opportunity to send a policy statement that the matter of reduction of the high duty on cement is dysfunctional to the nation and will be suitably taken up at the GST Council. That's point number 2. Point number 3 is the issue that all infrastructure developers and EPC contractors are facing, that every infrastructure project by law or by regulation needs to be structured as an SPV, a special purpose vehicle. For your lay viewers, an SPV is equal to a company. Now, if you have a normal company that makes biscuits, metal pipes, and let's say does real estate, then all of these can be done in the divisions of the company, and the tax implications across the different business verticals can be netted off with each other on the profit and loss account. But in infrastructure sector, each project requires both from the regulatory and the banking system to structure itself as a standalone company called an SPV. Now, this is very dysfunctional because infrastructure players have anywhere upwards from 40 to 80 SPVs. And to keep submitting individual income tax returns as well as the inability to cross-subsidize between profit and loss making is a significant damper. So while the effort is on to increase the ease of doing business for private capital to come in, it is important that the finance minister actually set up a task force to take a hard look at introducing what is called the group taxation regime for incomes for the infrastructure sector in the IT Act. That would go a long way. That's point number 3. Point 4 is we have, in a sense, been watching the developments internationally on the multilateral development banks wanting to play a major role in helping countries to transition to manage and transition to the green energy challenge. We understand that the World Bank particularly is keen to work with the government of India to structure a green energy transition fund and rope in other multilateral development banks, sovereign funds, etc., along with participation from the central government and private players, including various sovereign funds. So the idea is to actually once again suggest that the issue of transitioning to a green regime comes with very serious costs to a number of players across the chain, whether it is generation, transmission, storage, hydrogen, ammonia. So a strong recommendation is to actually set up a task force to consider setting up of a green energy transition fund with the help of the World Bank. And my last point is that I have noticed that across most of the presentations that were made to the finance ministry by various different sectors, social, core infra, industry, there's a very, very strong emphasis on getting a renewed focus on urban infrastructure financing, specifically by saying the time has come to have some very clear targets with the help of the Union Ministry, Finance and Urban, to have at least a certain acceptable minimum quantity of towns and cities raising municipal bonds. I personally think that a target of 10 or 20,000 crores should be an aspirational target to help galvanize Indian cities to take care of their infrastructure needs, which is sorely lacking. These are my 5 broad overarching points. As I said in the beginning, various numbers of tax concessions, tax support, tax rectification proposals have been brought up. They are matters of detail, and I'm sure the finance ministry would consider them. But I am just outlining for you 5 broad areas that impact cross-sectorally. Over to you.
Vinayak, I want to start with the very one basic number, which is that expenditure as percentage of GDP. It was less than 2%, now it is north of 3.5%, almost 3.5%. Do you think there is scope for the expenditure to go higher as percentage of the GDP? Do you think there is merit that government should keep on increasing the total allocation to the entire expenditure side?
Look, I can't talk about total infra, but it is across political dispensations from the UPA to NDA. There is consensus officially that the India's aspirational target is 8% GCFI, gross capital formation in infrastructure, as a percentage of GDP. Now, that's my starting point. If in this budget year you are going to try and reach that aspirational target of 8% GCFI, you need to spend 13.5 lakh crores. And I'll tell you how the arithmetic shapes up, since you asked a pointed question. Our thumb rule in infrastructure says that across the years, if you monitor the investments in infra sector, when the central government spends 10 rupees, a balanced 10 rupees is spent by 3 other constituents: states, extra budgetary resources, and private capital. So if the central government spends 13.5 lakh crores in the forthcoming budgets for it, then you will get another 13.5 investments galvanized and catalyzed by the 3 other constituents. That will take the infrastructure outlay for the nation to 27 lakh crores. Now, when you take that to 27 lakh crores, you will find that the nominal GDP expected at current prices this year is about 333 lakh crores. So 27 upon 333 gives you exactly 8%. So the maths holds. I hope that answers your question.
Thank you. Now let's look at the multiplier. For example, defense turned out to be a multiplier for the economy. Railways turned out to be a multiplier for the economy. Where do you think the big multiplier effect of 50,000 crore or 1 lakh crore will get created in 5 years?
Look, I have shared with you earlier on your channel that one has been told by very, very senior finance ministry officials last year after the pre-budget discussions that they have a confidential document in the finance ministry that 1 rupee spent on infrastructure leads to 3 rupees of GDP. And 1 rupee spent on direct benefit transfer, DBT, results in 90 paisa of GDP. So at a broad macro level, it is very clear what is the right strategy to galvanize the GDP and prime the economy. 1 rupee on infra spends leads to 3 rupees of GDP. Now, remember, 3 rupees is an average. So maybe I'm just hypothesizing. It might lead to a 1 or 2 multiplier on manufacturing of people who make goods and services for infrastructure, and construction sector is well known to have multiples of upwards of 5 to 6. So the average is 3. So the implications of a high allocation to infra is very, very clear. There's no debate on that.
And that my point is that within the infrastructure sector, for example, there is a new multiplier which gets created. You spoke about 5 points. You know, those 5 points, there was focus on, let's say, creation of a focus on green energy, focus on renewable energy. So within the infrastructure sector, just like defense has seen parabolic move, railways has seen parabolic move. Where do you think from a government standpoint the new multiplier will come within the government spending or within that bracket?
You are pushing me to answer this question, and I think it has some overtones of what it will mean to the stock market in terms of people who supply goods and services. Obviously, in green, the big push to green energy means that the allocations will demand a huge degree of manufactured goods and services that go to setting up not just generation capacity, because that is obvious that, you know, solar, wind, hydrogen electrolyzers will have to be manufactured. That's obvious. But even it will create huge demands for storage, pump storage, battery storage, transmission, substations, cables, insulators, transmission towers. So to answer your question, one of the big beneficiaries is going to be all the industries who are associated with providing goods and services to the energy sector. Obviously, steel and cement is a no-brainer because, you know, they constitute the bulk of infra on the construction side. I personally feel that this year there is going to be a higher emphasis on allocation to railways over historical roads. You know, roads for the last 2.5 decades has ruled the infrastructure roost by garnering the significant portion of the budgetary allocations. Roads have now reached a level of maturity. And I think the signals are coming through pretty clearly that railways might just overtake road in terms of allocations. Now, that has very serious positive implications for people who are involved in supplies of goods and services to the railway establishment. You know, not just electrification, but coaches, wagons, lines, safety equipment across the board. So I will highlight for you that, in my view, the sectors that are linked to electrical, green energy, and sectors that are linked to railways are likely to see a disproportionate increase in their business.
Okay. But if one has to look at the entire focus on the infrastructure sector, can I say that 4 to 5 years at least, this entire government spending and driving the economy through infrastructure spending, that trend will continue?
It will, unless we are pleasantly surprised with a surge of private sector investment. But as of now, the interest seems to be really restricted to InvITs and other measures that monetize existing investments. Brownfield assets are monetized. That seems to be the private sector, large private sector appetite. So you are right in your assessment that in the next 5 years, public expenditure of a level of close to targeting 8% of GDP will continue to be the pump primer of the economy, with specific high benefits to specific sectors, as was just discussed.
Okay, so railways is clearly going to be a focus area. 13 lakh crore worth of allocation is something which seems to be the consensus for now. And of course, the push towards green infrastructure and overall tax ramifications in terms of the GST being simplified for the likes of cement, etc. continues to be in focus. Thanks, Mr. Chatterjee, for making time and speaking with us and letting us know what exactly was the discussion when you met the finance minister last week and what exactly are the industry asks right now.
If you like this video, then like, share and subscribe to ET Now.